The Income Tax Act 2025. Today is day 38 and I am studying political parties in the first part. Taxation of political parties. It's governed by Section 12 of the Act. It says the income of political parties is exempt. But which head of income is exempt? Let's see. So for salary, it's not possible for a political party to earn salary. So we cannot discuss it. House property income is exempt. Income from business or profession is taxable. Income from capital gain and other sources is exempt. The major source of income for political parties is donations, which they call as voluntary contributions, and it is exempt. But in order to be eligible for such exemption, they need to fulfill some conditions. The first one is they have to maintain books of accounts and documents and get them audited. They have to maintain record of any donation which they receive above 20,000 rupees. This record means they have to maintain the details about the name, address of the person donating such amount. But there is an exception of electoral bonds. Now electoral bonds are unconstitutional, but still the provision is there that you don't need to maintain record if you receive payment through electoral bonds. It was heavily misused earlier. Then there's a provision of receiving donation of more than 2000. Then it says that we have to receive it only in account paycheck, demand draft, electronic clearing system, or electoral bonds. We cannot receive it in cash or uh, cross check or cash in cash. Only these four modes are allowed, otherwise it will become taxable. Then there is a report under Section 29C3 of the Representation of People Act 1951. We have to submit it to Election Commission of India from time to time, and we also have to comply with the requirements of ITR, income tax return, under Section 263 of the Act. That is all about political parties. Then comes the electoral trusts. What is an electoral trust? This is an example. An electoral trust receives donations or voluntary contributions from various businesses, Reliance, Jindal, Bajaj. Many businesses donate their money to electoral trust, and this electoral trust, it distributes the money among various political parties. Now, the donations the electoral trust receives is exempt, subject to two conditions. The first one is they have to distribute 95% or more to the political parties. At least 95% has to be distributed. Otherwise, whole of it will become taxable. And if they comply with this, it will become exempt. The second condition, and it has to be done before 31st March of the year end. And the second condition is they have to function in accordance with the rules made by central government. Here are those rules. The first one is, like, they received the donation and they deposited the said amount in any deposit, fixed deposit or any other deposit, and they received some interest income. So this interest income will not be exempt, it will be fully taxable under other income. And then there is a limitation from whom we can receive such donations. Some non-permitted sources are here. It says individual who is a non-citizen. We cannot receive donations from them. Any foreign entity, we cannot receive from them. Any other electoral trust, government company, or any other foreign source. If we receive donations from these sources, it will be a violation of conditions, and whole of the income of electoral trust will become taxable. Then there is a requirement of recording the PAN or passport number of the donor. We have passport number in case of non-residents, but it should be Indian citizen, because non-Indian citizen is not allowed to donate anyway. Then there is this condition, as I said earlier, we have to spend at least 95% or more distributed among the political parties. Now, this condition says that we can spend the rest 5% of the donation received for for meeting the expenses of the electoral trust, but we cannot exceed rupees 5 lakhs in the first year, and we cannot exceed rupees 3 lakh in the subsequent year. So, subject to the limits of 5 lakhs and 3 lakhs, we are allowed to spend the 5% of total donation received. Then we have to get the books of accounts audited of the trust, and then we cannot utilize it for the direct indirect benefit of either of its members or contributors, the relatives of members of HUF, which is a contributor, contributor of trust, any person referred in under section 355H, any concern these people, we cannot provide any direct or indirect benefit to these people. Then there is this small point about trust should maintain books of accounts and other documents. So this is the example. Now comes the case of subsequent years. Let's say in the first year, political party got donation and it utilized 95% or 96% of the donation, and some of the amount remained unutilized. This is called accumulated amount of previous years. So when during the current year we will be calculating the 95% of the amount, we have to take this into consideration and as well. Like in this example, we have the donation received during the year of 200 crore rupees, and then we have accumulated amount of previous year of 7.5 crore rupees. So for checking the 95% criteria, we'll take the whole amount of 207.5 crore. Its 95% comes to 156 crore. So if we have distributed 156 crore or more, then only will be allowed exemption under section 12. If not, will the whole of 207.5, the whole of the amount donation received in the current year will become taxable. This we have to apply 95% on the whole of 207.5 crore, and then only this 200 crore will become exempt under section 12, because this amount was already exempt in the last year, so we don't not need to worry about it in this year. We are talking about this amount that we received this year. If it qualifies the 95% criteria on 207.5, this amount becomes exempt. That's all it says about it. So some clarification about the case of violation. So in case of political party, amount of violation becomes taxable. Let's say a political party receives thousands, hundreds of crores of donations in bank mode, and then a person gives donation of rupees 3,000 in cash mode. So will the whole amount of donations become taxable? The answer is no. Only the amount of violation, that is rupees 3,000, will become taxable for political parties. But this is not the case of electoral trust. In electoral trust, in case of violation of any of the conditions, either violation of 95% condition or this non-permitted sources or this 5 lakh rupees condition, if any condition is violated, whole of the income, whole of the donations received by the electoral trust becomes taxable. That is all for